Hi, and welcome in, everyone. We're so pleased you're taking some time out of your day to spend with us with the GAI Webinar Series. I am Kate Westfall. I'm the COO of Global Ag Investing for HighQuest Group. We have a lot of exciting things going on this year. We are very bullish on 2021, watching the news and watching vaccinations tick up and hoping that we'll return to some sense of normalcy before you know it. But we're so pleased to be able to host these webinars and to bring the community together on a regular basis until we can be together in person. The next time we are planning to be together in person is for a really fun outdoor version of our flagship Global Ag Investing event in July in New York at Sleepy Hollow Country Club. And we think that's going to be a great way to bring everyone back together as kind of a family reunion in more of a relaxed atmosphere where we can be distanced but together and in the fresh air and have lots of fresh opportunities with agriculture on a global scale. So keep an eye out for more information on that. I hope that you're able to join us. Today, we're thrilled to have with us some longtime friends of Global Ag Investing, Nick Tapp and Charteris from Craigmore. They're going to talk about New Zealand forestry, which is also a bit of a departure for the webinar series. And I know it's a topic front of mind for a lot of you. And what's really exciting about this opportunity is mixing those rare mixtures of climate mitigation and economic returns. So we're really excited to hear how this opportunity can frame those two goals. So to start us off is Nick Tapp. He is the head of investor relations with Craigmore. Nick, thanks so much for being here, and I'll let you take it away. Oh, I do want to just say, don't be shy with your questions, everyone. Please put them in the Q&A box, and I'll pop back in later to facilitate some chat with the guys. So thanks so much, everyone. And Nick, thanks for being here.
Thank you, Kate. Thank you very much. Good morning, good afternoon, good evening, wherever you are in the world today, or even tomorrow for Che. Welcome to this webinar hosted for us by our really good friends at Global Ag Investing. Thank you to Greg and Kate and the team for running these webinars when we are so constrained from meeting in person. It's really looking forward to getting back together with people again. My name is Nick Tapp. I'm chair of Craigmore Sustainables LLP and head of investor relations based here in the UK. Some of you will know me or Forbes or some of the other Craigmore team from conferences and meetings we've attended over the last decade and more. But for those who I have not yet had the pleasure to meet in person, hello. It's really good to have you here. And I will briefly introduce Craigmore before handing you over to Che, who will take you on a journey around forestry in New Zealand. Craigmore is now in its 12th year as a specialist investment and asset manager of natural real assets in New Zealand, farmland and forestry, only in New Zealand and only in those sectors for which New Zealand enjoys a competitive advantage: forestry, dairy, and some permanent crops. New Zealand is fortunate with a robust political system, very secure property rights. New Zealand is blessed with a Goldilocks climate. It really is fabulous. The sunshine of Spain, the rainfall of Ireland, things really want to grow. And that means for a few key products, New Zealand is the global low-cost producer, which provides that competitive edge. And the people are pretty special too. A culture of self-reliance, self-analysis, self-improvement is a pretty strong place to start when you're building a management team and an operating team. So, you know, it's a great place to be. Today, Craigmore looks after just over $500 million worth of assets, not quite evenly spread between the three main operating sectors, but invested in 3 farmland partnerships, about which I will talk a little at the end, and a substantial managed account in forestry. Our investors are pretty evenly spread between institutional capital, the normal insurance companies, pension funds, endowments, and private capital. But they all have one absolutely crucial thing in common. They have an appropriately long-term investment horizon for these asset classes. These are long-term hold asset classes. And it was our investors who pushed us for a new partnership in forestry. They like New Zealand. They're generous enough to say some kind things about Craigmore from time to time. And they wanted to balance their exposure. Many already have some dairy and permanent crop exposure with Craigmore. And they wanted the third leg of the New Zealand natural capital stool, forestry. And that's why we're here today. We launched the Totara Forestry Partnership in December. We're building a book of commitments. and we expect to make our first investments certainly before the middle of the year. And to introduce you to New Zealand Forestry, I'm going to hand you over to Che, Charteris Craigmore CEO. And Che comes from a farming and forestry background in the North Island, and as a young man was employed in his family business planting trees. And in New Zealand, planting trees involves carrying very heavy bags of saplings up very steep slopes and sticking them in the ground. Che learned the basics of forestry at the sharp end, or the heavy end at least. So I'm now going to hand over to Che.
Yeah, thank you, Nick, and kia ora to everybody from Aotearoa, New Zealand. As Nick mentioned, I'm Chief Executive of Craigmore, and my personal connection or association with the forestry industry started in the 1990s on what was the sharp end of the spade, planting trees. Our family business was planting about 3 million trees per year on quite steep country, reasonably robust climbs, and it had been cleared out of native bush about a century earlier, and that probably was a mistake. There was quite a lot of erosion from significant weather events, rainfall events. And so during the 90s, there was a lot of tree planting in New Zealand, and that's when my exposure to forestry started, and it was pretty heartening. But without much further introduction, I'll just switch over to our presentation, and we'll talk a bit more generally about the New Zealand forestry sector, and also Tōtara and what Craigmore's been up to. So in terms of why Craigmore, and a bit of history in Craigmore's involvement in forestry. More recently, my forestry exposure began with Craigmore's first forestry business. In about 2010, we launched the Craigmore Forestry Fund, which was focused on dual revenue streams. One being the traditional timber revenue stream from forestry, which you plant a tree and then you can harvest it 30 years later or 27 years later. But there was a new revenue stream at that time, and that was from monetizing the sequestration of carbon that forests naturally have by growing timber. And that was our first foray into building a truly large forestry portfolio. Since then, in 2018, we opened a second forestry business with a partner, a German partner, Glenn Silver, who is an investment manager in Germany that specializes in forestry. And now we're on to our third forestry business. And all three of those businesses have had that focus on dual revenue streams. One, traditional timber. Two, monetizing the carbon sequestration profile that forests naturally have. And when we look at New Zealand, it has a couple of really specific comparative advantages that make it a particularly strong place to establish this sort of a business. First of all, of course, and we'll talk about this a little bit later, is that it has a strong and well-established emissions trading scheme that includes forestry. There are not many established schemes around the world. They're still maturing. And B, not many of them include forestry as a core component. Just more broadly, why forestry in New Zealand? Nick has mentioned the climatic factor, the fact that we've got a lot of rainfall, a lot of sunshine, and we also have some great soil, still relatively young volcanic soil. You combine that with Pinus radiata, which is a tree that we borrowed from the Californians about 150 years ago, and has been subsequently bred. The entire industry has focused largely on this tree. And we now have something that looks nothing like it used to look like in its home country. It is now one of the fastest growing softwood species in the world. It is also one of the most versatile. It's one of the few trees that you can use every piece of it economically. The bottom portion can be used for either appearance grade or structural uses, so moldings or even furniture. Structural uses in terms of building homes or construction, larger construction, and timber, prefabricated timber buildings. And the top part of the tree can be used for pulp and paper. It is an incredibly versatile tree with good qualities, And that largely just comes down to the sheer breeding and effort that's gone into breeding this tree and improving those qualities over time.
Okay,
Yep, you go, Nick.
Can I just ask you a question, interrupt? There will be those in our audience who are very aware of the Overseas Investment Office and some increased challenges since the change of government in 2017 to invest in New Zealand. Do you want to just talk a little bit about OIO and forestry investment?
Okay, New Zealand has a framework to manage the inflow of offshore capital into investments in our country, and in particular farmland and forest land. And over time, that threshold has changed. But in the case of forestry, which has a large portion of offshore capital already involved in it, it has a much more simplified approval process, and one which is largely been fairly open, and still is fairly open throughout the history of the New Zealand forestry industry. We also have the ability to, rather than getting approvals for every single property that we purchase, we can now get approvals for a portfolio. So we don't need to go back to the government to seek approval every single time we purchase a property. We can now get a pre-approval for, say, building a 10,000 hectare estate or 20,000 hectare estate. And we're currently just at the tail end of that process now with our second forestry business. Just more broadly as well, in terms of the political system in New Zealand, obviously incredibly transparent government, very low corruption. New Zealand often features in the top 1, 2, or 3 in the global indices around good governance, transparent governance, ease of doing business. And beside that, we have a very liquid land market, no land taxes. So it's an incredibly simple market to operate in, and one which enables land use change, which is really what Craigmore is good at, both on the farming side and the forestry side. A big part of what we do is land use change, identifying large tracts of incredibly fertile land in the right climate zone, and then affecting that change, which is easier said than done. And then back to the forestry sector, another comparative advantage that we have here is just the sheer weight of infrastructure that's built around our forests. Because we've been growing Pinus radiata and plantations for a very long time now, the infrastructure in place it's pretty good. Being a long, skinny country, access to ports is incredibly important. Having forests within 120, 130 kilometres of ports is a key part of ensuring that you have a profitable harvest at most points in history as the log price goes up and down. Also, New Zealand is quite close to Asia, so once bulky products like logs are on boats, it's not that expensive to get them to market and get them to high growth markets, whether that be South Korea, China, India. And the most important thing, lastly, is human capital. Because the entire industry has been focused around breeding radiata, growing radiata, harvesting radiata, processing it, there is a strong skill base, both from the scientific community right through to third-party service providers and support service providers as well. It is an industry that is well supported by people, growth, training, and it's it is truly one of New Zealand's comparative advantage sectors. So how big and what does it look like, this forest estate in New Zealand? It's about 1.7 million hectares, and 90% of it is Pinus radiata. There's a little bit of Douglas fir in the South Island, which is a longer growing species, but the vast majority is Pinus radiata, and also privately owned. In a lot of countries, the forest estate may well be largely owned by the public sector or a big portion of it. In New Zealand, in the 1980s, we went through a massive restructuring of our politic and our economy, and taking a lot of regulation out of the farming sector and the forestry sector, and public investment in those sectors as well. As a result, we have a fairly efficient, well-run forestry sector, which is based around Pinus radiata and private ownership. And of that estate, of the logs that we harvest, just under 50% are processed domestically, and the remainder, the majority, is actually exported as raw logs. And that may seem from a country perspective to be a little bit inefficient, but New Zealand is not the most efficient log processor in the world. What we are is one of the most efficient tree growers in the world. And as I said before, once logs are on boats, they're fairly cost effective to get into other markets. And Asia is obviously a really important market for New Zealand, given our proximity, but also given the emerging and the growing softwood supply gap in those markets. In terms of the size of exports, we're about just under $7 billion New Zealand dollars worth of exports annually, and just under half of that goes to China. China has been the growth market over the past 15 years, in particular with the free trade deals that we have, and has recently been extended, which basically eliminates tariffs on just about all wood products and logs, and improves market access as well. But our traditional markets have been Japan and South Korea. So in the 90s, that's where we were exporting to. China subsequently came along in the 2000s, and now India is the new growth market for New Zealand logs. And as I said before, about 50% of our timber, of our trees that are harvested every single year are sent offshore as logs. Now, looking,
yep. Just got a question from Ross Murray. Why is there so little timber processing capacity in New Zealand? It's about half, just under half, processed locally.
Yep, it's comparative advantage. Our comparative advantage is soil, climate, and a wonderful tree that we've grown over time. So R&D. Our comparative advantage is not, in particular, in the past history of wood processing, when labour is quite important, is not in cheap labour. It's not something that we're good at, and New Zealand traditionally hasn't invested in large bits of infrastructure. We have obviously pulp and paper mills here, the likes of OG, and that's because you can't ship. That's quite difficult to ship that product a long way. So a lot of it's processed here, but we tend to be a lot less competitive at processing timber than, for example, the family-owned small Chinese wood processors, where they'd have lots and lots of tiny little family sawmills or saws, and not far from the port, and they're able to get a lot more recoverable timber from every single log because they use every single piece. That will change, and the government is absolutely keen on changing that, but it's not going to change overnight. But I think technology is going to be create a big shift, as technology enables us to reduce the labour component and also enable us to get more out of every single log. When I talk about log recovery, when you have a round log, obviously you often try and get square bits of timber out of it. There's often a lot of wastage, and so higher labour costs mean that you can't get all of the wood out of a round log cost effectively. And just pointing to the impact of coronavirus, we've seen this growth in log exports over time, over the past 5 years, 6 years from New Zealand, and the drop off with coronavirus, that was logistics related. So even though New Zealand has had a fairly good response, relatively speaking, to the coronavirus outbreak, and we've had relatively few lockdowns. We still had lockdowns in early 2020, early last year. The forestry sector wasn't deemed to be an essential service because it wasn't producing food. So there was both, well, first of all, the shutdown of ports in China, which disrupted the market, but then lockdowns in New Zealand, which meant we couldn't harvest. And it's very hard to make up that harvest when you only have so many people. And so that's quickly bounced back this year, and production's looking really good. So it's that truly is a bit of a blip, and demand has been high as well from not only China but India as well.
And also, Che, it might be just worth mentioning the position with other supplies of timber, particularly with Russia, where exports have been falling off for some time, and there's talk of a ban.
Yeah, that's a very good point. And looking forward beyond 2021, not only do we have a softwood gap that continues to grow in Asia, we also have a supply gap around traditional suppliers of softwood to Asia. Russia just throwing logs across the border. Two things have happened. One is a longer term change as those Siberian forests have harvested. They're getting further and further away from the border. But more recently, log export bans have been in the Russian political discourse for the past probably 10 years, and we've got another specific example of that coming, and it's basically is going to stop Russian log exports fully from going into China. That just means more demand from New Zealand. Now, that's the traditional side of forestry. The new side that is quickly being monetized is forestry's ability to act as one of the most efficient and cost-effective mitigants to climate change. And very bluntly, afforestation of marginal hill country or grassland that often would farm sheep and beef is a great opportunity when converted to forestry to then absorb carbon credits or absorb CO2 equivalent as the trees grow. So this land use change is quite important in the global response to climate change. So in order to meet our, as an example, in order to meet our Paris Accord targets, we would need to, as a globe, sequester about 2 gigatons of carbon dioxide per year by 2030. And that's quite a lot. But if we planted about 1% of our global grassland, then we'd get about halfway there. So there is enough land out there to do this, and it is very cost effective compared to a lot of the technological heavy solutions. And it's also proven. We've been planting trees for a very long time. This is no new thing. And we can touch the carbon. It's a very, very real way of storing carbon dioxide. And New Zealand is quite well placed to lead this. We've got a tree with a dual purpose. So it's not just about carbon. We've been growing it for a long time. It's proven. It's fast growing, and at the end of the rotation, you still have strong timber fundamentals. Just to give you an example of the area involved, planting 25,000 hectares of farmland into forestry, and quite marginal farmland too, into forestry, would offset about 1 million tonnes of carbon dioxide per year. And that's a significant New Zealand city. And New Zealand has available about 1 million hectares of this kind of land, which is marginal farmland that is put to better use in forestry. Plus the quite important factor of political support. The fact that we've been through the painful process of creating an ETS, an emissions trading scheme, over the past, or more than a decade now, over the past 13 years. It now has low political risk of change, but also it has high levels of integrity because it's built around a source of carbon sequestration that you can go out and measure. 1 tonne of carbon dioxide absorbed is the same as 1 cubic metre of wood or timber growing on your property.
Jay, sorry, can I just take you back a slide? Yeah. Sorry, just on the political discourse around, I mean, there's general political support, but among the communities, the forestry industry communities and grazing communities. I mean, my view of it is there's a remarkably grown up debate and discourse around the land use change, which we don't see in much of the rest of the world.
Massive, yeah. It's land use is always well, not necessarily New Zealand, but political, and with a small p. And it's because you're taking a use that one community relies on and putting another use in place. But our politicians are willing to talk about it, and our local communities, those involved in sheep and beef farming, some of them are worried that, well, this is a change in land use and what's going to happen to sheep and beef farming into the future. Plus, they're facing a whole lot of other risks as well. And we know, because we are also sheep and beef farmers, so we can speak we speak the speak, we think how they think, and it's always just always takes a little bit of patience and a little bit of empathy to manage that transition at a country level. And fortunately, we are fairly balanced. We have a fairly balanced political system without too many extremes. So it's just the New Zealand way that we talk about these things, and we put in place safeguards. It's pretty straightforward.
Yeah, no, I mean, again, as a European looking at New Zealand, it's remarkably grown up and mature. Yeah.
So turning to the emissions trading scheme specifically, it's been around for just over a decade now, and it's built on the simple premise of if you're an emitter of greenhouse gases, then you need to report those emissions and then offset those emissions. In effect, every large business that has a carbon emission profile effectively has a liability on their balance sheet, which they must settle with the New Zealand government every single year. If they emit 1,000 tonnes of CO2 per year, then every year they need to turn up to the government and hand over 1,000 tonnes of CO2 equivalent units, which we call New Zealand units or carbon credits. Now, one carbon credit is the equivalent of 1 tonne of CO2 either emitted or sequestered. Now, what the New Zealand scheme, many schemes have that function and create a market around a liability that must be met from emitters. But the New Zealand scheme also has a particular focus on forest owners as the main source of sequestration or creation of NZUs or carbon credits. And fortunately, the maths is quite easy, because 1 tonne of carbon dioxide sequestered is equivalent to 1 cubic metre of Pinus radiata grown on the forest. And a forest over a 27-year rotation would grow around about 750 to 1,000 tonnes of CO2 equivalents per hectare, which it's quite a big chunk. 30 to 40 tonnes per hectare per year is a reasonable cash flow for a new forest. And
Jay, can I interrupt with another question from the audience, which I think you will give a fairly simple answer to, from Craig McAllister. Does the forestry need to be otherwise uneconomic to qualify for credits?
No, that's the New Zealand tends to issue pretty pragmatic and common sense legislation, and no, this is about absorbing carbon. So if and we'll talk about the harvest side later. So that's often a question we get asked. I think that's the question underneath this one is, but how, and you cut the trees down, so where does the carbon go? But no, if you're growing carbon, if you're growing trees, you're growing carbon, and you're able to then apply for carbon or be allocated carbon credits for that growth. And in terms of how auditable that is, because you're growing trees that you can touch and the government can measure, it's an incredibly auditable and transparent process. And every year, these forest owners are allocated credits, and then they sell them to the power companies and the oil companies, and that generates a cash flow. The oil companies then hand them over to the government to satisfy the liability that sits on their balance sheets. And because that's been working for a while now, and because it includes forestry, and there's a good chance it's going to include agriculture in 2025, unless there's an alternative proposal from the sector, then it is deemed to be one of the most comprehensive carbon markets in the world. And
you've answered another question. Actually, you almost answered 2 other questions. One was when the carbon credits are issued, which is every year, rather than at the end of the rotation. And the other was explain the timing of the cash flows of carbon credits, which is sort of annual issuance, but you don't have to sell them when you're issued them, do you?
No, and they're not taxable when you're issued them either. So a forester can plant a tree, and then after the year's growth, they will then be issued credits from the government on that prior year's growth, and they can sit on the credits, or once they sell them to an emitter, then that revenue is taxable. So like timber, you get to create this huge inventory. You've got this option value, which is the wonderful thing in forestry, is that you're creating an option value about when you monetize your inventory. And like timber, you can decide when you harvest your forest. The carbon credits, you can decide when you sell your carbon credits. So if the price is low, you can decide to hold on to them. Now to price. this is a curve of the price path over the past 10, 11 years in New Zealand. This is the blue line is the New Zealand unit carbon credit line. And we started at about $20 per unit or per tonne at the start of the scheme. However, at the first 5 years of the emissions trading scheme in New Zealand, we were open to international units. And for those that can remember, back in around 2012, globally, there was a real influx of suspect what we called hot gas units, which were incredibly cheap and weren't able to be used in many schemes around the world. Unfortunately, there was a loophole in the New Zealand scheme when it was initially launched, and we could use those cheap units. So emitters were using what we called hot gas Russian units. It's a bit of a slang, but that's what they were called at the time. In 2015, the New Zealand government decided that we'd had enough of that, and let's just focus on building a robust domestic market. And we were closed off to international credits. Since then, the price has climbed significantly up to almost $40 per unit or per tonne now. And that's in spite of the fact that we've had price caps along the way. So during most of this period, the New Zealand government had a $25 price cap. And even though we had a price cap in this period here, the price went beyond $25 for future purchases, because everyone knows the price is going to go up and the government's going to release those price caps or increase those price caps, which they have done. The year just gone, the government increased the price cap to $35, and now we've moved to an auctioning system, which effectively means that there's a price cap between $25 and $50 real. So that $50 will be inflating every year from here on, but that doesn't kick in until later this year. But even still, we're trading above the $35 price cap. Now,
I've got a question on the actual the trading from Chen Hai. Carbon credits can only be sold in the New Zealand market.
Yeah, it depends on this. It depends on your scheme and what you're trying to achieve. There are all sorts of other verification regimes and schemes out there in the world. It's not for the New Zealand government to know whether or care whether you're using those credits for something else. If you want to grow a forest in New Zealand and get it certified under some other international scheme or plan or voluntary scheme, you can, and use those offsets internationally. But NZUs, the government only accepts NZUs. So it's more that way than the other way. The green line here, just out of interest, this is the EU carbon credit price. And for much of the last decade, there's been a strong correlation, even though these schemes are not linked legally, and you can't sell NZUs into the European scheme, and you can't sell European credits into the New Zealand scheme. Even though they're not linked, we've seen this correlation, which says that there's some general similar causality or driver behind it. And obviously over the past 3 years, the increased awareness of climate change mitigation, the Paris Agreement has driven prices up. In the EU, it's gone up a bit further. In New Zealand, they're now trading almost at $70 New Zealand per credit, whereas New Zealand is now still lagging at $39 per credit. And
why do you think there is that lag? For most of that period, the EU market was trading at a higher level.
I think the lag now is the price cap, the New Zealand government price cap, which is really just to make the market less volatile. But when you convert this sort of carbon price into, say, a litre of milk, it has a negligible impact, even for those on a lower wage, to the price of milk. We're still talking a couple of cents per litre, as opposed to or 0.5% to the price of milk. We're not talking large numbers or large impacts on the cost of food. So it's the domestic price caps that have basically slowed us down from catching up to the European price. Now, just switching now to the biology or the ecology of a forest, and this will probably answer a question we often get around harvest. What happens at harvest time? Surely you've got to pay all those credits back. And And the quick answer here is that there is a very big difference between an existing forest estate that's been there for 20 years and is growing and being harvested and replanted versus land use change. Taking bare land, which has been used in fairly marginal sheep and beef activities, and creating a new forest on it. So this green line here is the carbon content, or the CO2, the cumulative CO2 held on a forest over time. So we'd plant at year 0, and then as the trees get bigger, the carbon content held on the forest, basically the inventory held in the forest, grows up until the point we harvest. So we get up to just over 1,000 tonnes per hectare, and then we decide to harvest. And under the New Zealand rules, as soon as any timber leaves your forest, the government considers that to be an emission. Even though the timber may be turned into furniture or a house, it's left your forest, so you are responsible to pay back that emission, that liability. It's what we call instant oxidation. The timber's just vanished into carbon dioxide, according to the legislation. So the carbon content then drops dramatically. But we don't actually harvest, when we harvest the forest, we don't actually harvest all of the biomass on it. It's only about 2/3, and the remainder of it rots slowly over time. But as that rots, and the new trees that we've planted are growing. So what we have is this constant rotation sawtooth look, where the trees grow, they get harvested, they're replanted, and we're growing again, harvested another 30 years later, and replanted and grown again. That's the carbon profile, long-term carbon profile for land which is going to be in forestry forever, for perpetual rotations.
Okay, the question which this slide sort of addresses really from Liz Shestakova, are carbon credits only for new growth, or is carbon stored in the forests that are not growing, and those mature forests issued as well?
Yeah, the government issues units for all growth. So that's all post 1990 growth. But I guess the commercial issue is that you've got the sawtooth where you get all these carbon credits, but then you're going to pay a whole heap of them back to the government, and you get some more, and then you got to pay them all back. So there's this massive price risk. It's what we call the harvest liability risk, and that is a commercial issue. It's a frustration. It's complexity we don't need. So the government has thought about that and said, well, okay, let's make this simple. If you go and purchase a grassland farm and plant it into trees, the carbon held on that farm was 0. Now, if you plant it into trees and hold that into a perpetual forest with multiple rotations, then this red line here is the growth of the carbon in the first rotation up until the long-term average carbon inventory held on that land through all these rotations. So foresters are then permitted to sell all the carbon generated along this red line up until we meet the long-term average carbon stock that will be held on that land in perpetuity, which means we don't get this carbon up here. We don't get to sell the carbon in the second half of the rotation, but we're then not expected to pay back any carbon during this part where it declines. So it makes the carbon profile for a new planted forest really simple. We effectively get a one-off cash flow bonus for the first 15 to 17 years of the forest's life, which is great cash flow, when traditionally forestry has been all about cash flow in 30 years. We now have cash flow for the first half of the rotation, and then again at 30 years when we harvest, without the complexity of managing these ups and downs. And that's a very important change in the past 3 years that the government's put in place to simplify the carbon sequestration profile of forests, and also that deals with the harvest liability. So what does that mean in terms of dollars is often the next question. So for a normal farm that we'd plant in the North Island of New Zealand, and just a standard radiata forestry regime, we would expect over 15 to 17 years to grow about, on average, 35 tonnes of carbon dioxide per hectare per year. And that equates at the current carbon price to about $1,400 a hectare, which is over a cash return of 10%. Forestry operating costs are about $70 to $100 a hectare. So even taking those costs into account, on current land values and 2,000 hectares to plant the trees, $2,000 per hectare to plant the trees, we're talking about a 10% cash return on average for that first 15 years. Obviously, the first few years, there's not much happening as the trees just establish themselves and grow. And we still maintain the ability to harvest that forest and get a harvest revenue at age 27 of $30,000 to $40,000 a hectare. So it's the dual revenue stream, which is really exciting about forestry in New Zealand.
Jay, that sort of leads on to a question from Alexander McGann, and which I think we cover slightly in a following slide, which is, what's the percentage breakdown on returns from timber harvest and carbon credits? What's the split?
Yeah. So I'll just go back one step. So a traditional timber forest would still trade at a discount rate of 6.5%, sometimes 7%. So still fairly robust returns, and we'd expect a new plant to be slightly higher than that because of the carbon revenues and a slightly higher discount rate. Looking at a new plant forest, if we pay $10,000 for the land and $2,000 for the establishment costs, we might expect that if you NPV'd the cash flows, we might expect 2/3 of the value is in carbon and 1/3 is in timber. And that's because the cash flows of carbon are high and also at the front end, whereas the timber revenues are all at the back end. But that's a reason why we like mixing our portfolios, and we'll have and we'll talk about this very shortly, that we'll have some carbon, some new plant forests with carbon and timber, and then we'll have some older forests which are just timber only, but still have a fairly healthy return. If you're going to translate it into land value, then maybe for new land, we would purchase for planting trees on. We'd purchase that for say $10,000 a hectare. For land with trees currently on it, that might be worth $3,500 a hectare. Just as another way of sort of making that point.
That's answered a question from Corey Sachs in a way, which is how has the growth in offset prices affected New Zealand land values, New Zealand forest land?
Yeah, it's impacted New Zealand farmland values. So it's because it's the land use change, which is really important, and that's not everyone can do that. It requires, the secret to land use change is understanding both sectors and the culture of both sectors. The culture of the sector which is currently operating the land, and the business of the sector that will be operating the land. And that's because you've got to acquire land, and to acquire properties, you need to understand how the existing land users feel and think and what they're worried about, and take that seriously. Just I know we're getting through things, so through our hour. So just very quickly on risks. Price risk, I mentioned earlier, forestry has this wonderful thing called an option. You can decide within reason when you harvest, and the same thing can be said for when you sell your carbon credits. In terms of fixing prices, there isn't a long-term price hedge for timber or log prices, but there are long-term offtake contracts available for carbon credits. So we could lock in a 15-year price path if we wanted to for the carbon generated from a forest. Less so for timber, but you can decide not to harvest. And you can hedge timber. Starting to be tools now, we can hedge timber prices out or log prices out a year or 6 months, and that's enough time to reduce your harvesting activities if the price really falls. So it's there are tools there. Volume risk, two sides to this. Carbon is real. It is wood. Carbon is wood. You can measure wood, therefore you can measure carbon sequestration. It's the same techniques we've used for decades for measuring forests for harvest and how fast timber is growing. So nothing is new here with actually measuring what you've grown and then getting carbon credits from it. And Pinus radiata having been grown in New Zealand across the whole country for such a long time, we've got wonderfully robust models for growth rates and things like that. Harvest risk, yes, it's a difficult job to harvest on steep terrain. Again, we've been doing it though for a very long time. Weather's important, and port availability and mill availability is a technical point that a lot of Northern Hemisphere foresters talk about. But to be honest, in New Zealand with so many ports, it's a pretty good infrastructure base we have. Asset risk value, yes. Price of carbon credits and timber values will impact asset prices, but because forestry is such a long-term game, the general practice with valuation methodologies is that we take the 5-year average timber price, because in order to value forests, because the harvest can be a wee way away, and obviously compression of movement of discount rates has an impact, but generally we see that as a slower impact on farmland and timberland prices than, say, obviously the liquid markets, but even commercial real estate. And then the big risk that everyone talks about often is, in particular, if you're from America, is fire. New Zealand doesn't really have much fire risk. We have a fair amount of rain, and it's big news in New Zealand, and it doesn't happen every year, but if there's a fire that destroys 100 hectares, of forest, that ends up on the national news, and that's out of 1.7 million hectares, and so it's not that common, and therefore it's insurable. We do lose actually more from wind, just wind blowing trees over than fire, but again that risk is not massive, and those two risks are generally managed in New Zealand by having a portfolio of forests spread across the country, so there's no single site risk.
There's another quick risk question from Ross. Landslip and earthquake, are they something that is a real risk?
Yeah, not maybe in the way that question's designed, or I think the question's coming from. We're not going to lose large tracts to earthquake, but there is around harvest time that if harvesting isn't undertaken in the right way, you're prone to erosion during that period of harvest from a high rainfall event, and for that reason we actually plant our forests in a certain way, and one of the tools we use is to plant 30-meter setbacks from significant waterways, just to protect waterways from any soil movement during harvest, because if trees have been there for 30 years and you take them away, then the soil's a little bit exposed while the new trees grow. So it creates a nice buffer of native trees around waterways. Now there shouldn't be any erosion, but it's just in the case there is with climate change, higher frequency of single rainfall events, high rainfall events, those sorts of things.
And Che, that actually leads into a question from Eric Way. Does Craigmore consider mixed plantings, exotics and natives?
We have done that before, but it's not great for timber. But from a carbon sink, if you wanted to plant a forest for just a straight out carbon sink, we're one of the few companies that has experience in that. We have planted eucalyptus or gums and had natives underneath them, and the idea was that the gums let a lot of light through, and then the natives come through over time. That sort of thing. Maybe alders we're now looking at. Red alder might be better because it's a nitrogen fixing tree. So it fixes nitrogen from the atmosphere. It's deciduous, so it lets the natives come away during part of the year. But it doesn't have much timber value. So it's very much a carbon only strategy. Just very quickly on tōtara, I've mentioned some of these points already. It's the same strategy we've rolled out in our two prior businesses. It's dual income timber and carbon credits. So therefore it's a mixture of existing forests and new planted forests. The combination of the two provide the business with a perpetual positive cash flow. Once the forest is established, we get carbon credits on the new plants for the first 16 years, 17 years. Then we go into harvest harvesting of the middle-aged forests that we purchased, and then we go into harvesting of the forest that we planted, and then that perpetual cycle, then we go into a perpetual harvest from then on, as the harvest profile just continues forever. It's a good model. It provides some downside protection in the case of carbon credits dropping away by having a timber income as well. Looking at a 200 to 300 million raise, and which is slightly bigger than the previous, our second business, approximately 20,000 hectares. And as always, sustainability is at the key of this. This is one of the most biological tools. This is an ecological tool to deal with climate change, and it produces a good sustainable product. So a focus is on greenfields plantings. It also helps generate more jobs. Where those jobs are is slightly different to farming, but afforestation of marginal sheepland creates more jobs in the regions, in the New Zealand regions. I've talked about our native planting policy. The national standard is about 10 metres setbacks from significant waterways. We're doing 30 metres, which is about the height of a tree. It also provides social access to those that want to use the forest for cycling or walking. We don't have to offer it, public access, but it's a nice way of changing the way New Zealanders think about forests, and giving local communities access to recreational activities. And having big native riparians through these forests is quite useful for that, and also creates significant biodiversity as well around our waterways. And about 2/3 of New Zealand's 1.7 hectare estate is in certification, and Craigmore is certifying its forest as well for FSC or PEFC, which are the two internationally recognised environmental certification and sustainability certification brands. Target return of 7% IRR, and looking to close early in 2021.
Jay, just got a question from John Ackland. You mentioned previous forestry partnerships. What returns have they achieved?
We were net, like true net. For our first one, it's over 6% cash in hand, and that's during a period when the carbon price started at 20 and went down to $1.80. So it was still, it still did well. The second business is obviously still growing, but I think it's probably closer to 7 or 8%. But we still growing the trees. We haven't sold any forests, and we won't be selling any forests for a long time.
Another just quick question on the strategy. I mean, the partnership. This is a question from Alexander McGann, which I can answer. Do the LPs own the land as well? Yes. In almost all cases, the partnership will own the land, and there will be multiple. The intention is that there will be multiple rotations.
Yeah, and in order to deploy capital, I mentioned this earlier, that it's really important that, because it's about land use change and acquiring bare land and converting it into another use, it's really important that you understand how the farming sector works and thinks, and you have networks in the farming sector, because that's where the acquisition opportunities come from. And that's what Craigmore has, because we are building some of New Zealand's largest horticultural orchards, and apple orchards in particular, but also kiwi fruit orchards. And we're also one of New Zealand's largest dairy farmers. And personally, a lot of us come from sheep and beef backgrounds and on hill country farms, and have family farms in this sort of country. It's we know how people think. We know how and we know how the sectors think, and we have strong networks to be able to communicate the opportunity here for those that want to sell their properties. So it's
Jay, quick question from Craig McAllister. How long to deploy the capital? Well, in the end, it depends how much we raise, of course, but
it could be at the top end 2 to 3 years. Probably 3 years at the top end, I'd say. But it depends on whether you go for a large estate. There are some large estates that are sold in New Zealand as well, existing estates. But for the greenfields establishment, that takes a lot of work. That's Craigmore, because of Craigmore's networks and our understanding of the farming sector, we're able to buy properties properties that most large investment managers wouldn't bother, because they'd see as not worth their time. But we can purchase properties as small as 200 hectares, 300 hectares. And that is the right thing to do, because we're not about buying large tracts of productive farmland and planting the whole thing. It's all about the right use for the right land. And so having the team and the capability to go and purchase 200, 400, 500, 1,000 hectare blocks and join them all up into portfolio is a big part of what we do. And that does take time, but it has a much bigger reward in terms of, you know, job creation, environmental outcomes, but also returns. Just very quickly in terms of the team, I've been involved in forestry for a while now, and in particular the last two Craigmore forestry businesses, and the new one, our partner Joseph Nagel from Glen Silver, has had a long history in forestry in Europe and in the US. John Barker, who is our GM, General Manager of Forestry, has just come from Timberlands, New Zealand's largest forest owner, and prior to that was 14 years working for GMO Renewable Resources, managing forest estates for them. And David Skilton was instrumental in building our second business, forestry business. And he, prior to Craigmore, had a decade working at New Forests, which is one of the Southern Hemisphere's largest investment forest managers. So good team, good mix of farming and forestry skill sets. These are just the foresters. On the other side, we have our farmers, and I think we're a much stronger business together, especially when you're working in a fairly small country like New Zealand. It's important to be across all of the key land uses. Now, that's it on the forestry side. I'll hand back to Nick just to talk about some of our farming businesses.
Thank you, Che. I'm conscious that there are three questions still to be answered, so I'm just going to very, very quickly skip through the farming partnerships. In reverse order of age, our most recent partnership is the Permanent Crop Partnership. We're finishing the deployment of the capital as I speak, principally invested across kiwi fruit, apples and wine grapes, with some small investments in hops and avocados. But those three, kiwi fruit, apples and wine grapes, are the big three in New Zealand, still growing strongly. The most exciting, because so much is happening, are these substantial new orchard developments. Gold kiwi fruit in Northland, a big apple orchard, and about to start a big vineyard development, both in Hawke's Bay. Very exciting partnership to be part of. The Dairy 2 partnership, a smaller amount of capital deployed into a really nice, diversified, and now beginning to really hum portfolio of high quality dairy farms on the South Island. And our oldest farming partnership, and I've left it to last just so I can spend half a minute on it. It's a mixed portfolio with dairy, some apples and kiwi fruit and annual crop horticulture, and a little bit of red meat. It's in recovery because it enjoyed 2 years of very low milk prices from 2014 through 16, along with the rest of the world. Operationally, the farms are really coming into their own now, throwing off good cash. All of our partnerships have a lock-in and then a review, and we're in that review process at the moment. And so it is an opportunity for people to exit, but more importantly, it's an opportunity for people to join us. And we have had the pleasure of welcoming some new limited partners into the farming partnership. So I will stop talking about farming now, but if anybody who's on this call would like to talk about the farming partnership, please do get in touch with us either directly or through Kate. If I can just pick up two questions from Karina O'Neill, one about our other tree species being developed to back up Pinus radiata, and also she's asked a much bigger question, which is are other dual purpose species being developed suitable for other climates? And we may not have another hour of Kate's time to answer the second one of those.
Yeah, we over the last 100 years, yes, there have been other species we've looked at and tried to develop, and we still are. Redwoods grow incredibly fast in New Zealand. It's It's amazing. Californians come out here and they can't believe how big our 30-year-olds are. The rotation is probably 40 years in New Zealand, but the timber quality is a little bit lower than what you expect in long grown redwoods. But they've got a great root structure. So for a long-lived species, 50-year rotation with a good carbon sequestration profile, yeah, not a bad tree, but not as economically rewarding as radiata, and that's the difference. It's just the sheer pace and timber quality, pace of growth and timber quality, and actually it's what we call the mongrel factor. Radiata can grow anywhere. It's even though we've been breeding it for a long time, the breeding has been with a lot of diversity. So it's an incredibly genetically diverse variety. It's not like we've really gone down the clonal route and we've got a very specific profile risk. It's there's a massive amount of genetic diversity in the radiata that we plant, and that's what, and it's proven with the fact we can plant it throughout the entire country. Anything lower than, I think it's probably about 600-700 meters, radiata does really well, and that's from right down at the bottom at the subantarctics to right up north in the subtropics. It's just so versatile and robust. But the other species is the cypresses, and we've got some clones, but again, some disease risks and not nearly as economically rewarding. But we will continue. The industry will continue to do it, to invest in new species, and I'm sure there will be other species in other countries, gums in South America, absolutely, but just different risk profiles.
And a question from Ian Monks, who we know well. What's the size of the market from emitters in New Zealand relative to the potential planting area of 1 million hectares? What might that mean if all 1 million hectares were planted quite quickly?
So at the moment, I think we're returning about 40 million units a year, but that's not all of through the emissions trading scheme is return of liabilities, emissions liabilities. That's not the entire pool because some sectors are still not in. And so if we took all of New Zealand's emissions, 55 to 60 million units would be going through the emissions trading scheme and returned. And if we planted 1 million hectares, that would only be 35 million. Would just be over half of that number, 35 million units per year. So there is a gap, and there is a gap. The gap is growing, and it takes a while to plant 1 million hectares.
You should know. You should know.
When you've got to physically plant on hills like that and carry trees in a couple of hundred, a kilometre, it's tough.
And a final question, which we may not wish to answer: which areas of New Zealand will you be targeting to acquire land for forestry?
The ones that grow the best trees. No, it's North Island largely and diverse across regions. With the portfolio or business this size, you want diversity, and you also want an eye to long-term climate risks. So fortunately, New Zealand isn't going to suffer the same degree of change in climate as a lot of other countries because we're an island nation in the middle of a very big ocean. But there still will be some impacts, and therefore we're looking at where is it going to get drier, where are there going to be more likely climatic conditions or events that might be detrimental. Even as robust as radiata is, you still need to look at that aspect. So I think the answer is probably 4 regions and a mix of climatic zones. A little bit on the west coast, a little bit on the east coast. Yeah.
All right, perfect. Thank you, gentlemen, so much. Nick, I got the great job of sitting back and getting to be a participant in the audience. So thank you. You did such a masterful job in navigating all of those questions and really making it an exciting dialogue for the full hour. I appreciate your hard work on that front very much. And again, I think you may have a future in webinar hosting. It was very well done. Very well done. So thank you both so much. I know that a lot of people are probably clamoring to, embrace this opportunity, and we'll have a lot more questions. So we'll make sure to make all of the contact detail available for everyone watching on the page on globalaginvesting.com that will host this wonderful presentation. So you can go back and get those questions answered or see something that you might have missed. And Nick, do you want to have some final thoughts just before we close out, just quickly?
Well, just to thank Che for an amazing run through, because we did cover nearly everything. And I'm struggling to find odd gaps. I think Che did an amazing job. So thank you, Che, and thank you, Kate, for setting this up. And thank
Absolutely.
you all of the audience who we can't see, which I find very disconcerting, having no audience response. But
well, I can tell you that this audience member enjoyed it very much, and I just want to say thank you to Che as well, because being an agriculture nerd, I don't get to swim in the forestry ocean very often, and I thought this was really helpful and a very well laid out way to understand what the opportunity is. So thank you for that.
And just to reiterate what you said, if anybody has any other questions or would like to dive in more deeply, or would like to talk about the farming partnership, please just get in touch. You can find us somewhere, I'm sure.
All right, very good. Thank you, everyone. Enjoy your day. Thank you for spending time with us.
Thank you.
Thank you all. Ka kite.